Welcome back. You're still with us here on Markets Today. We spoke about the markets, the IT space, as well as the aviation space. Let's talk about the rest of the headlines that we're tracking for you today, or the things that made headlines today in the 6 hours of trading session. Let's talk about the rupee itself. It fell close to a one-month low today as higher than expected US purchaser price index strengthened the dollar. However, the rupee's fall was limited by lower crude prices, and that supported the currency. In fact, Finance Minister told Lok Sabha that the Indian currency is the strongest when compared to its peers. Let's hear her out.
Indian rupee has been strong against every currency, and that is proved, and I can read the records. As regards just the US dollar, because of the policies adopted by the US Fed, is getting stronger and stronger. That has been explained. Now, as regards the foreign exchange reserve, Reserve Bank has used foreign exchange reserve that it has to intervene in the market only to make sure that the dollar and rupee fluctuation doesn't go too much.
The dip in the oil prices also had the centre mulling a cut in windfall gains tax on the domestic crude at the next review meeting. Sources say the government has pegged the threshold for levy of windfall tax if crude oil averages around $75 per barrel for about 2 weeks. With that, let's talk about the fifth headline for the day. The last one that made the news towards the end of trade. It was Dalmia Bharat acquiring cement, clinker and power plant from JP Associates for about 5,600 crore rupees. The stock rose about 3% as the deal will add to their cement capacity of more than 9 million metric tons per annum. Nigel D'Souza joins in with more details of that deal. Nigel, a good deal.
Well, towards the final half hour of trade, Dalmia Bharat was a stock in focus as they went ahead and they successfully got the cement business from the JP Group. Almost all of it has been got by them. From JP Associates, they've got close to around 9.4 million tons odd, and it's backed by good clinker capacity of around 6.7 million tons. In addition to that, they're also getting a thermal power plant of around 280 megawatts. So it's an integrated unit that they're getting for around 5,600 crores odd. This is good news. Remember, these assets have exposure predominantly to central India. They also went on to say that JP Power, well, they were housing the 2 million ton grinding unit. That's a Nigri unit at Madhya Pradesh. So they backed that as well for around 250 crores, but that's not integrated. This is good news for Dalmia Bharat because you're getting close to around 10 million tons at an EV per ton of roughly around $73 per ton. That's a discount to what Dalmia Bharat is trading at as of now, and it's at a discount in comparison to replacement costs as well. To set up a new cement plant, well, you'll have to pay $90 to around $100 per ton. So you're getting this at the mid-70s, which is a discount. Point number one. Point number two is it is an integrated unit. It's backed by clinker. You also have power that's coming with it. And it's giving them access into a new market. That's a central India with a straightaway capacity of close to around 10% market share out there. So that's good news. And finally, Dalmia Bharat has been talking about increasing its capacity from around 37 million tons to around 75 million tons. Now, this is a good 10 million tons that's come in there, and it helps them to get on its way to going ahead and doubling capacity by 2027. All in all, good news for Dalmia Bharat.
Good news indeed, but we're not done with stocks in news yet. Punjab National Bank and Indusind closed higher with gains after brokerages upgrade the ratings on both stocks. Abhishek Kothari joins in with the details.
Well, JP Morgan has written on PNB wherein they have upgraded the stock to overweight from underweight and increased the target price to 72 per share from earlier 34. So the upgrade is due to the fact that net slippages in Q2 were negative. That is, the recoveries outpaced the growth of slippages that you saw in a particular quarter. So stress is minimal given the fact that corporate SMA2, the loans due between 60 days to 90 days, is at a mere 0.1%. The growth is getting better but lagging peers in terms of the overall loan growth that they are seeing, and bank has excess liquidity profile given the fact that CD ratio is at just 70%, which augurs well for growth going ahead. We also have Jefferies, who have written on Indusind Bank. They have a buy recommendation and they have increased the target price to 1600 from 1530 that they had earlier. They said that the bank is ready for the next leg of re-rating in terms of the valuations. So they expect Indusind Bank's loan growth to be north of 20% for FY24, given the fact that they also expect return on asset of around 2% or more for FY24. So payoff will be seen in new loan segments that the bank is concentrating on, the initiatives that they have taken on funding, as well as credit quality checks that are in place. So valuations at price to adjusted book value of 1.5 FY24 seems attractive in terms of Jefferies' view, and they say that the CO tenure extension by RBI, that will be a key catalyst which will come in Feb 2023. Back to you.
Take that point, Abhishek. Thanks a lot for that. So those were a couple of banks that did well. Let's talk about the pharmaceutical space. Glenmark Pharma actually lost 2% after the details of the US FDA's warning letter to the company suggests several lapses at its Goa plant. Sonal Bhutra joins in with the details on that one. Sonal, it was down about 3%. What did the details entail?
Glenmark Pharma was lower in trade today. Now remember, the company had received the warning letter for its Goa unit back in November, and now CNBC-TV18 has been able to access the contents of that particular warning letter. Now remember, US FDA had inspected Glenmark's Goa unit from May 12th to May 20th of 2022 and had recently reported to the exchanges that yes, they have received a warning letter for the same. And this one speaks about the good manufacturing practices issues and has listed the issues that US FDA had with this particular inspection. They spoke about the fact that the company failed to thoroughly investigate any unexplained discrepancies that US FDA had highlighted. There were no adequate procedures for production and process control as well. Additionally, the company failed to establish and follow required lab control mechanisms as well. And lastly, the important one is that they failed to prepare batch production and control records with complete information, and that is the reason why they actually issued a warning letter for this particular unit for Glenmark Pharma, and on the back of which the stock declined in trade today.
All right, with that, we wrap up on this edition of Markets Today. Thank you for watching. Tomorrow will be a new day. We will keep tracking it.